Good morning, guys. Welcome to this Tuesday, August 12th. Uh, so far, we had a little bit of a weakness going into the afternoon, evening yesterday, and so far they've pretty much been holding on to their not the excuse me, they haven't been extending to the downside. They've pretty much been holding here after that little move to the downside. This was interesting because by the London close, we had a little pop to the upside. And since then, it was just a steady grind to the downside. They just ran it all the way down. So if I split out age here, you'll see how they just kind of went all the way down here. Ended up at the 63.90s. So far, though, it's not any big sell-off by any means, just a some weakness, afternoon weakness, if you wish. Now it could turn that into something gnarly if they keep going, but we'll see where they're going to go with this today. Now the overall going into today's trading, the overall news situation is we only had the NFB Small Business Optimism Index came out at 6. That was a good number. Then we get the CPI print here at 8:30, a few minutes. And thereafter, we have a couple of Fed speakers, and that's about it. So CPI print at 8:30, and then we'll see how things shake out from there. But I would look at this and say, fine. So we had a move to the upside here from Friday. Yesterday was a little bit of weakness. Looks to me like we are right here at the tractor at 64, 64.10 right now, building value. And we'll see if they can do something out of this thing here. After a bit, I may have to fold this whole thing together. But right now, I'm going to start off range bound and basically they trade the edges back to the mean. I think that's going to be the starting point. And we'll see if they start trading above these areas, the 60 to 64.30s, and we may start leaning in on the long side. If they start trading below the 63.70s, we are back in that lower range, and I would look maybe for rotation down here to the 6300s again. So that's kind of the overall picture on the ES to get started this morning. So looking to sell strength, I would say, to get started. 64.10, 64.30, 64.40s for rotations back down. Above 40s, I would be looking at the move to the upside. Looking to buy weakness. We're trading at the 6400 now. So the first level would be 63.90, 63.80, 63.70 for rotations and back up again. So that's kind of how do we get started. If it starts trading below that 63.70, that would be this big ledge right here. At that point, I would look to more for a rotation to the downside. So uh, looking to buy against the 90s, 80s, 70s. Looking to sell against the 64.10s, 30s, and the 40s for rotations back down. So that's kind of the starting point for today. And we'll see if we get a directional reaction on that CPI number. Excuse me. I can see a directional move if it becomes a surprise print to the upside. For some reason that happens, like a tariff-related print, so it ticks up for a month. Would not be surprised. So you're gonna have all these guys waiting, hoping for the inflation to tick up. It's gonna say, "Yeah, I told you so," and then there may be a market reaction on that. But we will see how the whole thing shakes out. Right now, though, I'm not too worried. But as I said, below the 70s, take off any range bound, start thinking short side and see how far they want to take it at that point. Looking at the Nasdaq and the bonds. So the bond market drifting lower looks to me like they're getting ready to drift down here back in this lower range again. So have not a lot of strength at all. They've been slowly drifting to the downside here, all the way down here to the 115s. And now they're 114.28. So at this point, the market is pretty much in the spot there where they going to take this, potentially going to retrace this right back into this lower range again. So hang on, let me see. There you go. There's my capital flow on the bonds. Slide this over. So here you have it. So it looks to me like they're getting ready to just drift back down again. So I'm just going to fold this together. Yeah, one big beautiful distribution right now, and we are just here up against this upper area. So just kind of mellowed out that edge we had here before. Still a nice volume edge here at the 114.30, but it looks to me like it's getting pretty mellow as well. So just range bound trading on the bonds until we see some bigger reaction to it. On the Nasdaq, looking to move. Well, we had this big same reaction to the downside yesterday. They popped a little bit and then absolutely collapsed all the way down here to the 580s. Yeah, so I would start same as the ES. We are a little bit better shape on the Nasdaq. So we are in a spot where we are up here against the highs. So uh, I would give it a little bit more room on the long side, but barely. So if they trade below this area, the 580s, I would give it the 580s and the 530s here. If it starts trading below that 530 level, that's going to get right into this lower support area. Then I think the chances are they're going to back off further. So initially starting off range bound. If anything, I would favor the long side just to get started, but it depends on how the CPI read comes out and how the market reacts to it. And then you have to take it from there. But initially, if there's no big directional reaction, I would look to sell strength at 670, 720, 770, 800 for rotations back down. I'm going to buy weakness at the 620s, 590s, 530s down to the 500s for rotations back up. Give it one level outside the obvious for padding, but if it starts trading below the 23,500, we're heading down in this lower range, and chances are they could get pretty gnarly. So we will see. I mean, the market has been trading higher on light volume for a while now, so I would not be surprised. We have a couple of knockdowns, but so far nothing which hasn't been bought. So we can certainly see a bigger correction at one point here, but it's anyone's guess when and if that happens. And if you want to take stuff off the table in the bigger picture, that's fine. The hardest part with that is figuring out when to get back in again. That's easy. See the market run away from you, and then like, oh shit, I should have been in it. But then you don't want to buy it because now you're buying a high. So that's the caveat if you're trying to take stuff off the table. You have to have a pretty good plan and had a little bit of a strategy when you do that. Anyway, so an ES Nasdaq range bound. Nasdaq maybe slight bias to the upside. Let's see if they can go where they can go from here. But we have a pretty tight range to work in, and let's see if it's going to break out of that. And then finally, gold, oil and gold. So gold just kind of holding here. Yesterday they were holding pretty good. Now they're down here in the 30, probing down below the 33.90s and lower. I'm thinking gold have a shot at taking heading lower. So let me see if I can find my capital flow on gold. This is December gold. So they're back in the reverse retesting this big ledge here. So 33.80, that comes out, and we can see them run all the way down to 33.40 pretty easily. And if it doesn't, then potentially trade right back up again. Now this big pop here was all about gold tariffs. So yeah, there was something about that mentioned, and I think they came out and said no, and now that gold is backing off. So chances are, if that was related to gold tariffs, I would expect them to retrace back to 33.40s. So that's what I'm thinking on gold. So I would look to buy against that 33.80s with a bit of caution. But if that comes out, I would be right back on the short side. It could be a nice short trade setting up. You had to watch it though, because when that happens, it'll be happening quickly. And then finally, oil. Slowly grinding down here. They are down below the 64s, but barely. They have not gotten up above 65, so I would stay on the short side on oil. So it's slowly grinding down. A little move down, sideways action. I would look to sell strength, 64.30s, 64.60s up to the 65s for rotations back down. And I would not be super aggressive on the long side. Maybe look for longs against 63 and maybe the 62.70s, these two support areas. If they take them out, I'll stay on the short side. So I'm thinking lower prices on oil. That's everything they do is to get the oil down. So I think that eventually it will come down, no matter how much market forces you have going on there. You do enough policy changes to drive down oil, it will come down. So I'm still staying on the short side on oil. So, but that's gonna have me get started on oil. Looking to sell strength up to the 65 for rotations back down. And on gold, range bound, looking to buy against that 33.80s and see if they if that's going to hold as a reverse retest. Right, back to the ES and pretty much where we left it. So I'm going to wrap it up here. So as you can tell, voice is not great. That's kind of just how it's going to be until it gets better. So I'm just going to say good trading. It's a pretty light volume anyway. So we have a CPI coming out in a few minutes, about 15 minutes. And then after that, we just have to kind of, if it's a directional reaction, then we know to try to trade in that direction. If not, we just fall back on the analysis. All right, guys, leave it there. See you back at 11:30 for the next update. Later.